Hi, welcome to the second day of tutorials for the Aerie Oscillator by Absidy LLC. This is a next generation momentum indicator that is designed to give very precise and advanced information about momentum changes and shifts in the markets. In our day one tutorials, we discussed the settings of the indicator, how to set alerts for the indicator, and a strategy for the indicator. The strategy that we discussed is looking at timing entry and exit signals based on momentum shifts with the green line and the yellow line. Today, we're going to discuss two methods on how to use the Aerie Oscillator to get greater depth of information on how changes and shifts in market momentum can be cued in on very easily by just looking at subtle cues from this indicator. As discussed in the day one tutorials, we only examined the relationship between the green and yellow lines. But in reality, all four of these lines, the green, yellow, blue, and red, all have a relationship to each other, and the crossovers that are given by each line can actually be beneficial. No two lines operate individually from the other two. So, to illustrate this today, we're also going to look at the blue and red crossovers. However, it should be noted that you can also use the blue and red lines together with the green and yellow lines. This will be discussed later. Here we're looking at the chart of the S&P 500 from June of 2019 till the end of August 2019. Already in the beginning of June of 2019, we have the blue line crossing over the red line. Since these lines operate slower than the green and yellow lines, they give longer-term information. They don't react very suddenly, and it takes a lot for them to cross over, even more than the green and yellow lines. So here, when we see this momentum shift, we know that this is significant. Again, since this indicator is designed to give advanced information about market momentum, it's not highly recommended to use this as a timing indicator. However, in this instance, it gave a great timing signal. If we had gone long here, it would have resulted in great profit with very minimal drawdown. After that, in the month of June, we only had two other crossover signals. These signals were quite weak as the market was range bound. Then, interestingly enough, in the first week of July, we had the blue line go under the slowest red line, which is interesting because if you look at the corresponding period on this chart above, the market is trying to push higher very weakly. But if you look at the indicator below, you can see that momentum is dying off very, very quickly. After that, we have a push at the end of the second week of July, resulting in a flat top around 300. Then we had all lines cross under each other. We had the yellow go under the green go under the blue, and the blue go under the red, just before August. Then, after that happened, you can see that the S&P dropped $15 in the first week of the month. After that drop, we had a small ranging area where we had one crossover signal where the blue line went over the red line just once. This was our indication that momentum might be shifting positive for a little bit. But it never crossed the zero line very confidently. It just danced around while the red line remained completely under that, showing us that this range-bound situation was not going to resolve itself. If you trade divergences, you can see that the divergence between this indicator and the S&P 500 was already forming from the beginning of June, before the signal was given at the beginning of August. We'll discuss this more in the day 3 tutorials of this indicator. In our next example, we're going to look at the 15-minute chart of gold at the end of August 2019. Again, we've been looking at the blue and red lines, which react slower than the green and yellow lines. We had an initial crossover of the blue line over the red line on the 27th that led to a brief upwards impulse. But then, as price stalled at this level, we had a very rapid decrease of the Aerie Oscillator, giving us early information that the market momentum had shifted negative. So even though that the price tried to push higher very briefly, we can see that we should already be looking for short positions because this is a very negative crossover. Then, on the 28th, we had the blue line cross over the red line again, along with the other green and yellow lines, showing us that there was an upward impulse forming. Should we have taken this, we would have had brief profit with almost no drawdown. But as this is a range-bound situation, there's not a lot of money to be made. Then, just after noon, on the 28th, we have the blue line cross back under the red line during a very tight range. Nothing much had happened here, and there wasn't many trading opportunities. Therefore, the blue and red lines did not cross over much, completely avoiding whipsaw signals. Where if it was giving a lot of crossovers, we would have been incentivized to enter a lot of trades. But because this indicator needs to see a lot of momentum shifts for crossovers to actually happen, we are protected from all whipsaw signals if we are looking at the blue and red lines together. Then we had a very brief impulse upwards in the early morning of the 29th. Then, on the early morning of the 29th, we had an upwards impulse signal that was confirmed by the blue and red lines. However, this was very short-lived, as we got a short signal just after that. If we look at the previous 2 days of trading, we can see that each upward impulse was very short-lived on the momentum indicator. Each downward impulse lasted for a very long time on the downward indicator. Therefore, we know that upwards momentum is dying very quickly and downward momentum is gaining great strength. As confirmed by the blue line crossing under the red line, we could have entered a short position here that would have resulted in good profit with very minimal drawdown. If we had taken this to where the blue line crossed back over the red line, we would have gotten out at around the market bottom when the momentum shifted again. Since we're entering back into a range-bound situation, we can see that the momentum recovered and again ended up near the zero line for a long time in the range. While during that time, we only had a single crossover signal telling us to go short. However, it is important to remember that this indicator gives us advanced information about market momentum, not timing the market. If we would have watched that the market momentum was dying here, we could have looked for opportunities to go short. And for fans of confluent and divergent signals, we had price making higher highs, while on the contrary, the indicator started making lower highs very early on before this drop had happened. So to recap where the momentum shifts have happened in this market, we highlighted all the momentum shifts on the indicator and the price action in red circles. Now, to introduce the technique that we had learned yesterday, when the green line crosses over the yellow line, we are going to highlight the areas where these crossovers happened that would have been good for timing momentum shifts. On the beginning of the 27th, our initial upwards impulse ended where the green line crossed under the yellow line. That was the end of the momentum there. Then, just before the big drop on the 29th, we could have used this as our initial short entry. Then, after the big drop on the 29th, our first short position could have been exited when we had a momentum reversal, as shown by the green circles. Then, we could have re-entered this again on the middle green circle and exited it on the green circle on the far right. And in our last example for today, we're looking at the 4-hour chart of Tesla from April of 2019 to the very end of August 2019. To get a more intuitive feeling on how the Aerie Oscillator gives advanced information on market momentum shifts, we're not going to highlight areas with the crossovers, but we're simply going to highlight regions and discuss them, and discuss what's happening on the charts. So from the middle of April 2019 to the very end of May of 2019, we had the indicator making new lows as Tesla was making new lows. This all is a confluent signal that shows us that momentum is increasingly going downwards. If we were to use this information to inform us on what kind of trades we should be taking, we would see that we should only be taking short trades here, as the momentum is increasingly pointing downwards, where recovery periods are very brief. The crossovers that are happening on the Aerie Oscillator between all of the lines are not showing us any bullish information except for briefly at the beginning of May, but even this, too, was quickly washed away in the downward momentum. Then, in June, we had price recovering a little bit with a very strong push upwards and price momentum. However, this initial momentum push only led to a brief range-bound market, which we can see in the Aerie Oscillator as it stayed just around the zero line. While it wasn't making any higher highs in the indicator, we could see that we were stuck in a range-bound situation. Then, around July 16th, we had a very interesting signal. Where price was slowly trying to exit the range-bound situation, our indicator actually crossed under. The green line went under the yellow, blue, and red lines. The green line went under the blue and red lines, and the blue line went under the red line, which is strange because now we have a strong signal that momentum is decreasing while price is pushing upwards. This initially does not make any sense. However, if we wait till just the end of the month, we can see that there was a very strong gap downwards. This was already reflected in the momentum information that this indicator had picked up before. Then we were stuck in a range-bound situation for a little bit before momentum started recovering. Hopefully, this last example shows you the advanced information that this indicator gives us a more in-depth understanding of the momentum shifts in the market that are very nuanced, that can prepare us ahead of time for trades that are about to happen. This concludes the Day 2 tutorials. Thanks for watching, and we greatly look forward to showing you more strategies. In the Day 3 tutorials, we're greatly looking forward to showing you even more ways to read this indicator that will give us even more information about shifts in market momentum before they happen. Thanks for watching, and we look forward to seeing you tomorrow.